Hey, it's Dario and this is Coffee with the Markets. And today I wanted to talk to you about Netflix because it seems like it's losing subscribers. So let's see exactly the reasons why Netflix is losing subscribers, and also we will go into see Netflix on the markets. Netflix is actually one of those companies that had a really strong growth in the early beginnings. Everyone started to use Netflix and Netflix had a really high growth in terms of earnings and also in terms of subscribers. So here we see, for example, that from 2013 till 2018 Netflix had a really high growth, especially on the international side. So what happened in 2019? Well, the growth rate of Netflix falls below 3 million users, and for the United States it actually goes in negative. So actually Netflix in the United States lost subscribers. But what are the reasons why the platform Netflix has been used less in this year? Well, I think there are mainly three reasons why this happened. So the first reason is to search basically in cost. We have seen Netflix raising the cost of their subscription 2 times in 3-4 years, even less probably, and that simply scared away clients. So actually the price is too high and new clients don't want to come in and old clients want to come out. So it's simple as that. Another good reason is that there are new platforms. We have, just for example, Amazon and Disney, and those two are so big that they can take away subscriptions from Netflix. I mean, at the end of the day you cannot pay 1,000 subscriptions, you need to choose, and if Disney suits best to you, you will go to Disney. And the third reason that I could find is the lack of higher and higher quality TV series. What does that mean? That Netflix doesn't have quality TV series? No, quite the opposite instead. Netflix has too high of quality TV series. That means that if they put out a series that is high in quality, they must at least put out another series which is at least the same or better quality. And that's really hard to do when you have to compete with Stranger Things, when you have to compete with Orange is the New Black, and you have to compete with many other TV series that are objectively high quality. And that can be seen by the fact that many people make the subscription just to watch a certain series. For example, when Netflix released the 3rd season of Stranger Things, the subscriptions went up really high, but then after the series finished, after the people watched the whole season, the subscription number dropped again. That means that people are coming back just for certain TV series and they are not remaining. And that's the objective of the company. You need to remain in the company. Otherwise, you can be attracted to other competitors, you can be attracted to other forms of entertainment. But what happened on the markets? Well, Netflix lost a 13% of its price. That is really high for Netflix. And the reason again is to search in the growth rate of their subscriptions that have been dramatically decreased, because the earnings and the revenues are not that bad. But the problem is the subscriptions. And if you don't have clients, you don't have long-term longevity. So the market didn't took that quite well, and actually Netflix lost 13% of its price on the markets. But now let's go briefly see the Nasdaq. I'm still watching the QQQ ETF, and yeah guys, all that glitters is not gold, as they say. Yeah, we had the break, but now the price made a really strong downwards candle, a really not good black candle downwards with great volume. And yeah, of course it's something that I don't like, but I don't actually care. I'm the type of guy which doesn't watch every 1% of the price, so actually I don't really care. I will let the price breathe and then I will talk about in detail later on. But if we really want to check, the price on Friday opened at a gap up, but then recovered all the gap in a downwards movement with one candle, one daily candle, which lost around 1.5%. So yeah, the price broke, it broke really well as we talked about it in the last week, but now I wouldn't call it it a retracement, of course. It's really small to call it a retracement. But yeah, I mean, the price has done skyrocket just like that. Also, it's the Nasdaq. It's really big and heavy. I would be careful. As I told you in the last week, it's not a break that determines the longevity of a bull run, but it's simply the time that will determine if that bull run will happen or not. It's simple as that. So yeah, we had a little pullback of 1.5%. I wouldn't worry much about that. It's not like the American economy will crash anytime soon. So yeah, just be careful. The same thing applies to the S&P 500. We had the break and then we had a really strong candle on a downwards movement. So yeah, the same thing applies. Just be careful. It's not all that glitters that it's gold, as they say. I hope that's correct. If it's not correct, correct me in the comments. But now let's jump right into the stock of the week, because we have the stock of the week and we need to talk about Match Group. The ticker is MTCH. Do you know who owns Tinder? Yeah, I'll let you process the question. Well, I'll tell you. It's Match Group. It's the stock of the week of this week. Again, Match Group, which is the owner of many dating apps, including Tinder. So actually we can understand that it works in the technological sector. We have again a technological sector. More specifically, micro sector is dating apps. Okay, we have just that business. Okay, we have 100% of the revenues coming from dating apps, but also the revenue is divided pretty well between USA and international, which is something that I pretty much like. Okay, I don't like to have the revenues concentrated in one product, as we have unfortunately here, but also I don't like the revenues concentrated in one country. So actually seeing it divided almost 50-50 between USA and international is pretty good. So on the technical side, we had a really good consolidation with lower and lower volume, which is something that I really like to see. I always like to see decrease in volume in the consolidation part. And then we had a really strong white candle breaking the consolidation with high volume, really high and strong volume, and that's always good to see. We are at all-time highs, so actually we could wait for the price to change its direction to exit the position. Again, this is not an advice, you don't have to buy this stock, but just have a look at it. It's really a strong stock from my point of view, more on the technical side than on fundamentals, because again we have the debt increasing, but nonetheless also on fundamentals it's really strong. But hey, this was all for this week. If you enjoyed the video, please leave it a like and let me know in the comments down below what is your stock of the week, and I'll see you in the next video. And today I wanted to talk to you about an article I was reading about the Gen Zers wanting to buy more houses. Not only they want to buy houses, but they are actually saving to buy those houses. And that's something really impressionable, because the article says that, for example,